Get back to the discussion on Reliance and that big investment that's coming from QIA in Reliance Retail. Abhijeet Bora, Senior Research Analyst of Sharekhan, joins in. Devangshu Dutta, Founder and CEO of Third Eyesight, is also with us. Gentlemen, morning to both of you. Abhijeet, let me start with you. Your thoughts on this investment that has come through, and what do you see as the potential valuation, the potential growth for Reliance Retail? I mean, it's been firing on all cylinders up until now, but what is the way forward?
See, firstly, if you see the valuation wise, they're at a 1% stake, they valued it at around $100 billion. When we compare it with the street valuation of 85 to $90 billion for Reliance Retail, it is approximately 10% higher than what the street is doing, and even higher than what we are building in terms of the retail Reliance Retail valuation. So we think that this will be positively viewed by the street, given the strategic investor coming in and giving in better than expected valuation. And also, we may hear in the upcoming AGM about timelines for the potential IPO for both the Geo as well as the retail business, or the potential listing or demerger that can create long-term value for the shareholders, as we have seen for Geo Financial Services also. So we see this investment as positive for Reliance Industries, and we have a buy rating on this stock.
But in terms of timelines for the IPO, do you expect something like that to come through in the AGM? Because, you know, AGMs are generally not the forum for announcing timelines of IPOs. I mean, this time maybe this thing may be different, but Devangshu Dutta is also with us. Devangshu, your own expectations from the AGM this time?
I think I'm coming. I would like to stick to that angle, and it's a platform to essentially cement that message that Reliance is the dominant retailer in the market, and whatever premium or whatever valuation is being expressed is something which is justified. If you look at it from a competitive perspective, they're head and shoulders above every other retailer. They have kind of delivered on their promise in terms of multi-vertical growth, across the spectrum, and they're in different segments. So I think the AGM may be a good platform to announce it, the IPO, or they may defer that decision to a later event. But irrespective, I think the messaging is very, very clear.
Okay, all right. Got that point, Devangshu. Thanks for that. Well, Abhijeet, coming back to you, the valuation is doubled, right, at around 100 billion odd. But even the operating performance has improved. From the last dilution to this, well, they're close to 20,000 crores in terms of EBITDA. So the financial performance as well has kept up pace. My question to you is, how do you see the financials improving from here on for this particular vertical? And also, since now the big boss is there, do you expect further pressure on DMart? Because if I look at DMart, that stock has gradually been seeing a lot of selling in the last 18 months or so. Any relation or no relation whatsoever?
DMart we are not covering, so I would not be able to comment on that. But for Reliance, we see that they are improving their market share, that they're acquiring new brands, they're coming out with new FMCG products in the market. So they will continue to see the above industry growth rate and market share gain. They're clocking in a EBITDA margin of more than 7% consistently now. So the growth trajectory for Reliance Retail will remain robust over the next few years in our view.
Okay. Dipan, coming to the stock, right, I wanted your thoughts, because the stock has done nothing this entire year. I mean, 1 year back, the stock was at 2630. Today, it's in fact at 2500. So it's, fallen compared to what the market has done. Why do you think that is? Is it because of the thing you started the discussion with, saying that, there's so many businesses now, some doing well, some not so well. So it's kind of become confusing for investors as well. Until these listings happen, perhaps the stock may not give you disproportionate returns compared to the market. Is that the feeling you're getting?
Well, one cannot really pin it down to one specific reason. But by and large, I think from our perspective, certainly when we are looking at Reliance Industries, that's one of the kind of factors to consider. But apart from that, you should add the fact that you have got shares of Geo Financial, free shares of Geo Financial. So you add that to your return as well, and then you have a positive gain for the year. But on the whole, I think large cap stocks have not been doing well the past 6 to 12 months or so. And what we have seen is largely a mid cap rally. And even not just Reliance, but even the likes of HDFC Bank, ICICI Bank have kind of underperformed. So, but these phases do take place, and that doesn't mean that the fundamentals of Reliance Industries are in any way, deteriorated by any standard at all. In fact, quarter after quarter, they are delivering on their strategies and on their business plans. And if you look at all the businesses of Reliance Industries, the jewel in the crown from our perspective is Reliance Retail. Given the kind of secular growth that it can generate over the next few years, this entire unorganized to organized investment theme is best played through Reliance Retail. It's just that we cannot buy it on a standalone basis.
Okay. Devangshu, one last question from my end on the retail business itself. You were talking about how the growth in the retail business has been outstanding over the last many years. If you just map the last 6-7 quarters, right, from an average revenue base of around about 58-60,000 crores, the retail business is now doing almost 70,000 crore revenue per quarter. What kind of an upside, what kind of a realistic growth are you penciling in for Reliance Retail?
It would be optimistic to kind of expect the same kind of growth because you've got the baseline effect of the COVID pandemic before that. But the fact is that the inflationary pressure is coming off, and in terms of competition, Reliance has, established itself. Space has been vacated by Future Retail to a certain extent. Consumption is growing. So I think we should be expecting very healthy quarter-on-quarter growth. And apart from that, the fact is that the retail footprint itself will grow. So I think both of those engines will be firing for Reliance.
Okay, well, interesting chat, guys. Thanks very much for joining us with a take on Reliance Retail, the investment which has come in, and of course, what it means for RIL as well.